Hey, what's up my friends? So in this video post, I'd like to share with you on how you can actually use the MACD indicator in a trending market. Because I think unknown to most traders out there, they don't really know that the MACD indicator can actually be used to serve as a confirmation in your trading entries. So I hope after this video, you find it useful and you can actually, perhaps have some new trading ideas in your own trading. So with that, let's roll. Okay, so the MACD indicator is actually developed by Gerald Appel. It is used as a momentum indicator as well as an oscillator. And this is what the MACD indicator looks like over here. So in this box over here, you see a few things. You see a blue line, you see an orange line, and you see this pink color histogram. So don't worry, you may look confusing and complex at first, but allow me to, explain to you what these lines are all about. So as you can see, this blue line over here, if you want to know the mathematical calculation behind it, is actually called the MACD line. And you can actually derive it by taking the 12-day exponential moving average and minus off with the 26-day exponential moving average. And that will give you the MACD line, which is this blue line you see over here. Now, how about this orange line? This orange line is called the signal line and is simply a 9-day exponential moving average of the blue line over here. And that's how you will derive the orange line. And last but not least, what about this pink color histogram over here? How is it even formed? And it's actually very simple. Let me clear away the clutter. And you see the pink color histogram is actually a function of the blue and orange line. So what do I mean by it? So let me give you an example. You see over here, the blue and orange line, currently they are looking to expand, I would say diverge from one another. So you can see the blue and orange line are moving further and further away from each other. And what that translates into a histogram term, in histogram is actually you see your histogram expanding as well. So when your blue and orange line, they're expanding, your histogram is also expanding as well. And when you see your blue and orange line, they start to contract and get closer and closer and diverge with one another, you see your histogram starts to shrink as well. So this is actually how both the orange and blue line correlates with the histogram you see over here. So it's basically to show you, right, in the visual context on what the current momentum of the market is. So if you see that the histogram is, expanding and trading higher, it shows you that momentum is picking up. And likewise, if you see that it's shrinking lower and lower, it's telling you that momentum towards the downside is, coming back into the picture. So now, more importantly is how you actually use this MACD indicator in a trending market. And this is what I want to show you. So just a brief run through. This is the chart of a euro dollar. And first thing first, to use a MACD indicator in a trending market, number one, what you need is a trend. So in this example, you have a downtrend. And the second thing you need, right, if price is in a downtrend, is that you want your MACD histogram to be above zero. And where is the zero? Zero is over here. So you want a MACD histogram to actually be at least trading above zero. So let me write it down. Histogram above zero. And last but not least, to get a confirmation or a trigger to trade the trend, what you want is actually a tick down. And some of you may be wondering, what is a tick down? So let me share with you what a tick down is. So a tick down is actually very simple. You look at this, the histogram, you look at it bar by bar, you see a tick up, a tick up, a tick up. And in this next move is a tick down, right? Because you see the histogram is actually lower than the previous bar compared to this. So you have a tick down over here, a tick down. So that is a tick down in the MACD histogram term. And when you have a tick down, it's telling you that momentum is shifting towards the downside, because you see the blue and orange line, they're actually starting to converge with one another. So it's telling you that, you can look to take a shot and, hop on board with this trend. So another example is this. You see a MACD tick up, it ticks up, it ticks up, and then you have a tick down. So when you have a tick down again, it's telling you that the blue and orange line, they are converging with one another. Momentum is shifting towards the downside, and you can consider, taking a trading opportunity towards the short side. Why short? Because, price is currently in the downtrend and you want to stay with the path of least resistance. So I hope you find this video useful. So let's do a recap, right? Just a very brief recap. Number one is you want a trend, whether it's uptrend or downtrend, and whether the trend is up or down, you will reflect on what are the histogram levels you'll be looking at. So if, say for example, again, we have a downtrend, your histogram, you want it to be above 0. And if your histogram is above 0, the next thing you look at is for a MACD tick down. So when all these three criteria are in place, then you have a trading opportunity to trade a short side. Whether you want to trade on the next bar open, whether you want to queue with a limit sell order, is entirely up to you and your trading plan. So with that, I wish you good luck and good trading. I'll talk to you soon.